This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
A big win for Netflix, the stock soaring more than 20% after hours on a strong earnings report.
But a big miss for Caterpillar. The bellwether falls short of estimates, and tonight the CEO tells us what the results say about the health of the global economy.
And cracked foundation is a shortage of homes for sale, creating a speed bump on the economy's road to recovery. All that and more coming up on Nightly Business Report for Monday, April 22nd. Good evening, everyone. Susie, it was a strong earnings report late in the day from Netflix, but it wasn't that way earlier today.
That's right. Welcome back, first of all.
Thank you very much.
Great to have you. But that's where we begin the program. Our top story, earnings and the economy, and conflicting signals about the shape of the business landscape. First, Netflix, a stunning earnings report after the market close, boosting the stock by more than 25% in after hours. The streaming video company is pulling in millions of subscribers thanks to the new strategy of rolling out original movies. Quarterly earnings beat analyst estimates by 11 cents a share.
By contrast, disappointing numbers from Caterpillar. Quarterly earnings there plunged 45%, and it issued a gloomy outlook for the rest of the year because of weak demand for its bulldozers and excavators. Caterpillar considered a bellwether for the global economy, and so investors pay attention when the company says it expects slow growth in 2013. More on that in just a moment. Also today, some discouraging numbers on housing. Sales of existing homes fell in March. Economists had expected them to rise, and the miss could be a sign that the housing market recovery is not as strong as previously thought. Diana Olick reports.
Like everything else in spring, the number of homes for sale is supposed to grow, but that is not happening. Listings are down 17% from a year ago, according to a new report from the Realtors. Listings usually increase by 100,000 from February to March, but they grew by just a third of that this year. Investors have bought most of the distressed homes, and potential sellers are either still underwater on their mortgages or worried about finding a move-up home themselves. Supplies are down across the nation, in Minneapolis, Houston, Charlotte, to name a few. That has made the competition tough for buyers.
We put in over 30 offers, and we were outbid in each one of them.
Leah Wilson-Jacobs has been searching for a home in Atlanta since December.
2 years ago, I would have went in and people couldn't get their asking price, and now it's really tough to even ask asking price. Now you have to bid over.
Low supply has caused prices to soar higher and faster than most expected. Gains hit the double digits in February, up just over 10% from a year ago, according to CoreLogic. Ironically, that too is adding to the lack of supply.
If I'm underwater in my equity, and now suddenly I'm not, but I'm up 5%, and the market around me is appreciating 6, 7, 8, 9, 10%, why don't I wait? Let me wait and perhaps get a 10% return on my investment, not a 5% return.
Not only are buyers desperate, so too are real estate agents. Some homeowners are finding these in their mailboxes, cards from agents saying, "What would it take to get you to sell?" One of the top real estate websites, Zillow, has a new feature called Make Me Move. Potential sellers can float a price that would get them to move without actually formally listing the home. Meanwhile, the realtors are begging the builders, claiming the market needs housing starts to jump 50% to meet demand. But the builders have their own supply issue, lack of land, labor, and materials. That will keep sales and listings low for the foreseeable future. For Nightly Business Report, I'm Diana Olick in Washington.
More details now on those Caterpillar earnings. Caterpillar reported a first quarter profit of $1.31 a share. That was 9 cents below analyst estimates. Revenues also came in below expectations, down 17% to $13.2 billion. Now, Both misses are blamed on a global slump in mining. Caterpillar also slashed its sales and earnings outlook for 2013 because of a big slowdown in new mining projects. The company also said that it would resume a share buyback for the first time in 5 years. When I talked with CEO Doug Oberhelman earlier today, I asked him about the key factors for the revisions in Caterpillar's outlook.
We obviously adjusted our outlook for 2013. We brought the top line down about $5 billion, and that's really done around our mining business, which has slowed significantly and is continuing to slow. But I do feel the mining business could be at or near a floor. So I feel a little better about that. And then we just held our bottom line at about $7 a share.
So, Doug, tell us about the mining business. How long is this slump going to last? Is this just a temporary rough patch?
I do think the mining rough patch is temporary, but the definition of temporary is something I can't define. Something that's very interesting that we are watching closely, our traditional mining truck business here at Caterpillar, the trucks that we've made, the off-highway trucks, the huge 100 to 400 ton trucks that we've built for decades, is off 50% from its peak. With our acquisition of Bucyrus, those products that came into us a couple of years ago are only down about 15%. So thankfully we have that acquisition. There's a lot of mining still going on in the world. It's the big expansion projects that have slowed. So while mining is occurring every day, as it always has, our aftermarket business is doing fairly well. And as we look forward, if the economy continues to grow, which we think it will, construction continues to grow, which we think it will, mining has to follow at some point, and it will. It's just a question of that temporary definition you mentioned.
What about U.S. construction? We hear all the time about how the housing sector is recovering. How much of an improvement are you seeing?
The housing business is recovering. In fact, we're calling for about 1.1 million in starts. That's still way below the peak of a few years ago, but it's almost triple what it was at the bottom in 2009 and 10. And we're seeing that and feeling that from our customers every single day. And it's fairly widespread. I was just in Florida not long ago. Our Miami people were talking about a big boom in condo construction there. I was in Arizona a couple weeks ago, and you can see new subdivisions, albeit small and not the scale that we saw in the peak in the early 2000s. It's coming.
Tell us about China. What are your customers telling you there in terms of business? We're getting so many mixed reports about a slowdown.
I think mixed is probably the way to look at that. We have some pockets that are doing well. Overall, they brought the Chinese authorities have brought the growth rate down, which is very healthy. I was not too excited about a 7.7% growth rate in the first quarter at all. That's still very good growth rate. There's still a lot of things they're trying to correct from the bubble they had there in the last 5 years. But overall, we're optimistic. Our inventories have come down significantly in China. We had a couple of good months in terms of our sales to our contractors and customers. And our second quarter should look a lot better inside China. So just a bit more optimistic on China, at least in our business.
So, Doug, you announced today a stock buyback program. Tell us why, and is there any price level that you're expecting Caterpillar stock to be in, let's say, the next year?
Now that our balance sheet is much stronger than it was, we have quite a bit of cash on our books. And with the price of the stock and the multiples, we thought it was just an opportune time to do it. So we announced that today. About $1 billion will contribute under the plan that's outstanding. And really, it's really around the strength of our balance sheet. Absolutely, we can take it, and we thought it's a good time to do so.
And that stock buyback announcement might be one reason that Caterpillar shares soared today, up almost 3%, as you see there, to $82.71.
Well, Susie, while Caterpillar may be seeing blue skies ahead, if you fly, you may be seeing red. Airports all across the country may be experiencing big delays as air traffic controllers are furloughed to save money. The impact of those federal budget cuts from the so-called sequester. Hampton Pearson has more now on how those cuts could change your travel plans right now and through the summer.
Both New York's LaGuardia Airport and LAX in Los Angeles featured major delays in the first 48 hours of fewer air traffic controllers on duty nationwide. The new normal for the FAA because of government-mandated budget cuts. For the next 6 months, 15,000 air traffic controllers will be furloughed, losing at least a day's pay every 2 weeks. Passengers are being told to expect delays, just as the summer travel season moves into high gear.
Traveling is stressful enough, and when you don't know how long it's going to take you to get through the line, you have to add extra time that you wish you didn't have to get from point A to point B.
I'm not doing anything differently, but I do believe that if you want to prove a point, aggravate the average American.
Airline industry experts say delays are just the beginning of what could be a nightmare for airline travelers.
Your delay at LaGuardia means you're going to miss your connection in Chicago. So it's a whole system. Omaha's going to get hit, Lincoln's going to get hit, everybody's going to get hit.
The major airlines claim about a quarter of the 27,000 commercial flights per day could be impacted. Their trade association is suing the FAA to halt the budget cuts.
The FAA has and should have exercised the discretion not to furlough air traffic controllers who never in the history have been furloughed before during any budget sequestration, any shutdown of the FAA, or anything like that.
Even the White House admits this was never supposed to happen. Press Secretary Jay Carney noting today that's why Secretary LaHood asked Congress to replace these dumb cuts. At Reagan National Airport, I'm Hampton Pearson for Nightly Business Report.
Flying may be more difficult these days, but there's good news for drivers. Prices at the pump are down 11 cents a gallon over the past 2 weeks, and according to the Lundberg survey, could fall by another 20 cents as we get closer to Memorial Day. Gasoline prices are falling because of rising supplies of crude oil and lower than expected demand.
Demand for shares was higher on Wall Street today. Stocks ended with modest gains after last week enduring the biggest weekly loss in 5 months. The leading sectors were energy, as crude oil rose more than $1 a barrel, and technology, ahead of those after-the-bell earnings due from Netflix and Texas Instruments. The Dow ended the day 19 points higher. The Nasdaq was up 27, and the S&P 500 added 7.
Well, the price of gold also rebounded today, surging nearly $26 to $1,421 an ounce. But last week, as the price of gold was falling, nervous investors pulled $2.7 billion out of gold exchange-traded funds, according to the Lipper Fund. Now, Lipper says that most of that money was invested in international stocks.
Turning now to market focus. Texas Instruments reported after the close that revenues and profits were higher last quarter than Wall Street forecast. More important, it said sales and profit may beat those expectations again this quarter. Shares had gained more than 1.5% before the close and were up an additional percent or so on the earnings news after the bell. Microsoft was the biggest Dow gainer today on CNBC's report that an activist hedge fund is taking a $2 billion stake in the company. Other investors welcomed that news, bidding up Microsoft more than 3.5%.
Energy was the best performing sector and Halliburton the top performer. The company said it's close to settling claims from the Deepwater Horizon explosion. It's set aside $1 billion for settlement costs. That reserve, however, resulted in a quarterly loss for the company. But aside from that, Halliburton's operations reported strong earnings, and investors were pleased to see progress in resolving claims from that 2010 explosion. Halliburton shares surged almost 6% to $39.
Shares of General Electric near the bottom of the blue chips today. J.P. Morgan downgraded the stock by 2 notches, from overweight to neutral, following GE's caution about its industrial businesses. GE shares were down almost 2% today. And coming up, is the end of tax-free online shopping near? We'll present both sides of a hot debate that could impact your money. But first, a look at how the international markets closed today.
When you buy items over the internet, do you pay taxes on them? Apparently, a lot of us don't. Now there's some new legislation moving forward in the Senate that's aimed at making sure everyone pays up no matter what state they live in. And a vote could come this week. Eamon Javers is with us now from Washington with more on this very controversial legislation. So, Eamon, Who's behind this move on collecting more sales tax?
Well, that's a good question. It's something the retail industry has wanted to do for more than a decade. Make sure internet vendors collect sales tax for products sold online. And today, the United States Senate is taking up a bill that would allow states to collect sales taxes from out-of-state companies.
There are some items where consumers are very price sensitive, and online retailers who do not collect sales taxes can sometimes undercut the price a brick and mortar retailer can charge by 10 or more % just because of this situation.
And that adds up to big money for hard-hit state budgets, which has captured the attention of lawmakers here in Washington.
My state loses about $103 million last year alone. That's a pretty big chunk of our budget. That sounds silly to California. On the other hand, California loses about $4 billion plus.
Amazon, the nation's leading online retailer, supports the bill, preferring the simplicity of one national standard. But eBay and others have criticized the measure, arguing that mom-and-pop vendors who use online sales sites just aren't equipped to collect sales taxes in jurisdictions across the country. Today, a new opponent came out against the bill, the financial services industry, which says it fears this could be a backdoor to a financial transactions tax.
We don't know that for a fact, but the fact that the way this bill is drafted opens up the question that it could apply to services and could apply potentially to electronic trades or discount trades done electronically, raises a concern that we think Congress should spend time looking at before establishing a mechanism that would allow the states to do that.
White House spokesman Jay Carney today said the president supports the measure, and he noted the bipartisan support for the idea. The bill, titled the Marketplace Fairness Act, was introduced by Wyoming Republican Senator Mike Enzi. Back to you.
Eamon, thank you very much. We've got two opposing points of view on this topic. David Quam is the Director of Federal Relations for the National Governors Association, and Steve Del Bianco is Executive Director for NetChoice Coalition, an advocacy group that protects online commerce. Steve, let me begin with you. Why do you oppose this legislation?
Yeah, fairness has lost all meaning in this town. I mean, how can it be fair when you're going to force businesses in all 50 states to face audits, tax demands from tax collectors in 46 different states where those businesses have no presence at all? It's really becoming a burden and a barrier on businesses that want to reach customers all around the country.
David Quam, what's your response?
I think Steve's version of fair is a little bit off. Fair is when your corner store competes fairly with some electronic commerce seller from another state who's competing for those same customers. Both should have to collect sales taxes. Both should be allowed to compete on an even ground. That's what's fair.
Steve, back to you with a follow. Why do such companies as Amazon and Walmart find themselves both supporting this when they do a lot of online commerce?
Yeah, that's easy because it's ridiculous to say that the internet doesn't subject itself to sales taxes. 19 of the top 20 e-retailers already collect for all the states that have a sales tax. And Amazon will be collecting for over half the U.S. population later this year under current law. You see, e-commerce is subject to sales tax, and more big e-retailers like Walmart, Target, and Amazon already have to collect. And when you already have to collect, you'll take any amount of simplification because it helps a little, especially if it puts burdens on the businesses you compete with.
Mr. Quam, why don't you answer Steve there, but also answer the question that I've read that this proposal that is in the Senate and then would presumably go to the House would unfairly burden small internet retailers, most especially in states where there are no sales taxes now, like Montana, like New Hampshire, and several others.
You know, fairness means a lot of things, and for those states without a sales tax, those companies, if they're going to do online business and do business in another state, they need to play by that state's rules, and that includes collecting sales tax. And in an internet age with technology, that can be done. As far as what's being collected online already, for those companies who are already present everywhere, they are collecting and have been collecting. But electronic retail means there are not the same borders anymore. And so your corner store who does not get an exemption from sales tax is having to compete against people who don't have to collect. Now, every citizen's supposed to remit that use tax, but at the end of the day, this is a collection issue for states. It's about fairness for companies and competition and making it better for consumers who can have more robust competition between retailers.
Steve, what about that? What about the idea that the little guy is, or the online retailer has an unfair advantage in these matters? And number two, as you pointed out just a moment ago, many of these companies are already collecting and remitting sales tax. Why shouldn't all of them do it?
Yeah, you have to. Every place that you have a physical presence, you've got to collect. And as far as Main Street being at a disadvantage, take a look at what happened in states like Texas, Pennsylvania, New York, and California when Amazon.com began collecting sales tax. You'll notice that there wasn't a rush of customers away from Amazon back to the Main Street stores. Reason? Consumers don't buy online to avoid sales tax. They buy online for better choice, better convenience, and lower prices. The internet is here to stay, and in fact, businesses all across the U.S. turn to the internet to reach new customers. They're the ones that will run headlong into what David calls the new borderless world. It's borderless because the tax auditor from New York State doesn't have to respect the New York State border anymore. He can put demand letters and audit requests into businesses in Nebraska and all 50 states.
David, address, if you would, the constitutional questions that arise here. There are portions of the Constitution that say that you really can't, one state can't tax interstate commerce from another state.
You know, the Supreme Court said in 1992, a time when we were just talking about catalog, nobody had heard of Facebook or Yahoo or eBay or Amazon, that at that time, state laws were too complex for everybody. But guess what? We're in a different day and age. Everybody knows electronic commerce. The internet is here to stay. It's robust. And what you have right now is because Congress has not acted, you're giving a subsidy to online retailers that isn't needed. They're robust. What we need to do is treat everybody the same. If you're going to look for customers in a state that has a sales tax, you should collect and remit just like everybody else in that state does.
Steve, you got the first word. David got the last. Thank you both for joining us tonight.
All right.
We appreciate it.
Thank you so much.
And still ahead tonight, as China's auto market grows, is demand for luxury cars about to shift into high gear? But first, let's look at how commodities, treasuries, and currencies fare today.
China is the world's biggest market for auto sales, and with its growing middle class, may soon become the largest market for luxury car sales. And automakers have taken notice. Now, upscale brands are pushing hard to appeal to the growing masses of Chinese luxury car buyers. And as Phil LeBeau tells us, it's paying off.
If you believe image is everything, then you'll understand why China, and Shanghai specifically, have become a primary focus for luxury automakers. It is also the reason why China has become the #1 market in the world for luxury brands like Land Rover. Thanks to this dealership in Shanghai, Land Rover sales in this country jumped a staggering 71% last year.
We are convinced that we can do even better in the future.
Even better than 71% annual sales growth.
71% was outstanding. We will not have it every year. But with the product program we offer for the Chinese customers, I'm quite sure that we can continue to write a success story.
In China, German luxury dominates the market, with more than 70% of the high-end vehicles sold here being Audi, Mercedes, or BMW models.
It continues to be breathtaking. I mean, when you even think back like 5 years, it's a different country. But even when you come 3 times, 4 times a year, every time you come, you have the impression it's different from the last time I was here. New buildings, new construction, new airports. It's amazing.
BMW chose the Shanghai Auto Show to unveil its new X4. The small CUV will be sold in China, but will be built at the BMW plant in Spartanburg, South Carolina. It's all about feeding the zooming Chinese luxury auto market that will pass the U.S. by 2016 and dwarf it by the end of the decade, with sales topping 3 million annually.
The market in California ebbs and flows like any other market in the United States, but I think China is really looked at and earmarked as the luxury growth market for the next decade.
As for GM and Ford, China's luxury auto boom has so far been a missed opportunity, but one they're trying to turn around. GM is enjoying success with Cadillac sales as they're adding more dealerships here. And next year, Ford will be bringing the Lincoln brand to China to begin sales over here in Asia. In Shanghai, Phil LeBeau, Nightly Business Report.
It'll be interesting to see how the Lincoln does there. It has been struggling so much here, but aren't those numbers amazing?
They really are. And having been there about a year ago, you see not only those German brands, which are so dominant, but you see a very large portion of Rolls-Royces. I think on a per capita basis in Hong Kong, which is, of course, not a part of mainland China, Hong Kong has the highest level of
they want to make a splash.
Bentley and Rolls buyers. But it's really something over there.
Well, that's it for us tonight. Nightly Business Report. I'm Susie Garrett. Thanks so much for watching.
And from me as well, I'm Tyler Matheson. Thanks so much for joining us. Have a great evening. We'll hope to see you right back here tomorrow night.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Options Profits helps educate beginning and seasoned options traders. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media, we are TheStreet.com.
I'm Susie Garrett with a Nightly Business Report news brief. A setback in the housing recovery. Sales of existing homes unexpectedly fell in March, but prices shot up 12% with fewer houses on the market. Airports nationwide are reporting big delays as furloughs begin for air traffic controllers, part of the federal spending cuts in the sequester. Stocks ended higher, led by energy stocks, as crude rose more than $1 a barrel. But despite that, gasoline prices fell by 11 cents a gallon over the past 2 weeks and could fall another 20 cents by Memorial Day weekend. On Wall Street, the Dow rose 19 points, the Nasdaq added 27, the S&P up by 7. And after the market closed, shares of Netflix surged as much as 26% thanks to strong earnings. Be sure to tune into Nightly Business Report right here on your public television station.